The rules of the money game is not linear. It's not binary, right? It's not yes or no. It's very three-dimensional when it comes to building wealth. It's not just one cookie cutter. You got to do this, and that's going to make you this. It doesn't work out for everyone. It's not a blanket coverage for everybody.
Welcome to Small Strides, Big Business, the podcast for insurance agents who want to grow their business in a way that feels smart, sustainable, and authentic. On this podcast, we have honest conversations about better sales interactions, client service, automation, mindset, marketing, referrals, practical things that move your business forward in real life. Whether you're brand new or years into the game, so grab a notebook and let's dive into today's conversation. Hi, everyone. Welcome to another episode of Small Strides, Big Business. I'm Krystal Small, your host, and today we have Travis Yoh. Travis, welcome. Thank you so much for being here. I'm really excited to chat with you today. I know that you have over 12 years of experience in this industry and a little bit of a different background, previously working with a large MLM before starting your own company about 3 years ago. And so you're currently CEO and sales director for your company, which is FTG Financial. And I know that you are a mentor to about 10 agents at the moment, overseeing some other companies and really focusing on education and bringing people up in this industry. Do you mind starting just telling us a little bit about you? And I know your wife was part of your journey as well.
Thanks again, Krystal, for the introduction. Yeah, it's been a nice journey in the insurance world. I got my feet wet when my wife, because she's been in the industry for over 20 years, doing both real estate and financial services, life insurance, retirement. And so when I met her, kind of got my foot in the door, got licensed, dabbled a little bit, but didn't really dive in until a good 2-3 years into it. And that's when I started really venturing out and taking it a little bit more seriously. Yeah, we're like, as you mentioned, worked for some bigger MLM companies. And, it's a good foundation to learning the space. You get introduced to a lot of key carriers, some good training, learning some, business models that could definitely help your business. But then the vision for myself was never to be stuck in that type of industry, or not industry, but company, but eventually build my own. And so, like you mentioned, I'm a huge advocate for financial literacy as a whole. And I like to teach others that they can do themselves as well. I'm not big on building a massive agency of, 200, 300 agents. I believe that entrepreneurship and being able to create your own wealth is super important, especially in our economy right now. So I did start my company 3 years ago, and it's been a great road. For me, nothing was done on my hands. I give, glory to my Heavenly Father, of course, but it's been a fantastic run. For sure.
Awesome. I think I have some experience in the MLM space too. And there is a lot of personal development. There's a lot of, personal growth that happens there. So it's a great foundation, I think, for a lot of people, which is awesome.
Absolutely. It's a challenge for sure. Because not only, like, for me, I've been married for going on 13 years this May. So, we got married, we got into this industry. And so we're not only learning the nuances between our marriage and the kind of the roles that we're doing, plus, I do have children as well. We actually just had 2 children in that time frame. My son's 12 now, and my daughter's 10. So learning the foundations of our marriage, learning about being the right parents, but then also making sure our business is successful. There's a lot of plates that are spinning, and you have to wear different roles and different hats in that. And that's why being an entrepreneur and that self-development piece of it is huge. That's why for me, the first, I would say, good 5 years was learning and balancing and trying to figure all of that out. And, there are some tough times and there were some really good times. As you said, it's not easy working with your spouse. What I will say is what helped me kind of navigate that is defining the roles, making sure that we're both in our specific lanes, as we say. Because if someone's overstepping or there's a certain accountability factor piece where it's not being communicated effectively, it causes a lot of tension and passive aggressiveness. And I'll tell you, Krystal, the D word got thrown around quite a bit. And glory for me, we all got through it. And stepping away and actually finding that foundation of what really matters to us made all the difference in the world, not just for my company, my business, but for us as a as a family and firm.
Awesome. So I'm hearing a couple things that not just are important in business, but important in relationships, which communication. But another one you said, defining your roles. I think that that's huge in marriage. We could do a whole, a talk on marriage, right? I've been married for 20 years. It'll be 20 years in September. But I think that is so key, whether you're building a business or not, but especially if you're in the business and you're, network marketing. I know when I did it, you kind of just do everything, right? You jump in and you're, like I say, you're the janitor and you're the cook and you're the driver and you're the CEO and the CFO and like the salesperson, right? So you're everything. But when you're working with your spouse, defining those roles is important. So I know that you guys are in a different place now, but if you can go back there, just can you help to, what did that look like? Did you guys have conversations? Did it just kind of work its way out? And what were the roles? Was there, let's start there.
Yeah, so going back to when we were actively building the business, and I'll tell you, at our highest point in our career, this is back in 2020, COVID time. We were still in person as well as virtual, so we had about 50 agents across the country that were either zooming into our active trainings twice a week, or we were still in person actively doing sales trainings every weekend, basically. So figuring out our roles in that one, she was the main head of coordination. And obviously we learn our skills. I'm a very technical type of person. I love numbers, but I come from a restaurant background. So I'm very good with talking with people. And she's more of the managerial role. But she's also very good with people as well. Able to connect, able to put together, notes in a way that I could never do. And she's more of the visionary as I'm more of the technical side. So it's funny how, they say, opposites attract. And it actually goes pretty well hand in hand in business this way as well, because whatever she wasn't good at, I was, and vice versa. So, yeah.
Awesome. Thank you. So you guys eventually did make, I'm sure it was not an easy decision to shift from the network marketing or the MLM space to building your own. And if I understand, your wife is not currently working with you. Is that right?
That's correct.
You've defined your roles.
We defined our roles, and at that current time, so I'm gonna go back to 4 years ago. So this is a late 2022 going into 2023. She just took a back seat. She told me directly, she's like, "Love, I can't do this anymore." And I said, "Okay, well, I'm gonna do what I can." And so I dove in, and I did as much as I could with what I had with, the company at the time. And again, it's learning, well, not learning, but continuing to build and maintain that style of how MLMs do it. It's just not sustainable. It goes against what I stand for when it comes to this business, because I actually care for people. When I have my clients, I don't look at it as a transaction based. You can't in life insurance. You really can't, or retirement. But people treat it that way. And it's unfortunate because now you're looking at your clients as a number, not an actual person, a relationship, and a client, or a lifelong client that you have.
Yeah.
So after figuring that out and stepping back and kind of regrouping and reanalyzing of, okay, well, what do I stand for? What is my mission statement? What are my morals and goals and standards? And that's where I'm like, yeah, you're right. I can't be with a company that goes against what I stand for. And so stepping back again, and there's challenges and hurdles too. And it's scary, right? When you start a business, that's the number one thing in entrepreneurship is it's that fight or flight kick in. And you either have to persevere and push through, or you go back and you'll get a job, which you're comfortable with. For me, I think really pushing through, and this goes for all entrepreneurs or new interested entrepreneurs, is you got to find a way to keep pushing through, because there are tough times that you're going to have to keep going.
I think it's important to almost expect that. It's a little easier to move through those and not give up and quit when you are expecting, oh, they said it was going to be hard. Here we go. We're going through it right now, right? So I think that's great advice. And maybe it's a great reminder to people who are, have been in an entrepreneur or a business owner for a while, just to remember that it certainly is not all rainbows, and to expect that there's going to be those tough times for sure. Yeah.
So starting the new company, and there's nuances of building in, getting the LLC and formulated, getting your corporate license in place. So there's all those tangibles too, but then you start going into the marketing aspect, the advertising, building your socials, website creation, et cetera, et cetera. And then not only that, but also the tools on what you want to do with your company and how you want to make sure your agents are being able to have those types of tools and resources as well. So luckily for me, when I pivoted, my wife had a good relationship with a gentleman that runs his own BGA right here in Newport Beach. I'll shout them out. They're called IMS Associates. His father, his name is Sean Garreau, but his father I forgot his father's name, but he was the very first um, third party agency to sell direct to carrier for for AIG.
Interesting.
Yeah.
Wow. Yeah. What's the word I'm trying to think of? Someone who paves the way, right?
Yeah.
There's a term for that.
Right. He paved the way, and so he created his own like separate company, like brokerage outside of like it being an independent agency. Because yeah, because back then, you mean you had these bigger MLM companies and these independent brokerages that are able to sell um, these carriers separately where you're not actually an agent of the company. But he was one of the first, and this is back in like the 1980s, 1990s.
Wow. Very
His son,
exciting to
his
know.
his son took over the company. We had a conversation and told him, what I'm looking to do, my vision. He's like, honestly, you'd be a perfect fit for us. And he gave me the opportunity and the tools, the comp structure, and then it just made everything easy for the transition.
Fantastic. So, somebody who has gone from essentially working for someone else and building, right? And MLM is, you've got all the tools and the support. You walk in to shifting and starting your own business. Um, has your perspective of success evolved from, since you started your own company, especially, maybe in your personal relationship with your wife, certainly your everyday expectations, but has there been a shift in your perspective since you started your own business?
I'm so glad you asked that question. Absolutely. When we're younger, this goes for a lot of people. They want a few things. They want work-life balance. They want to be able to not live paycheck to paycheck, and they want to be able to, be successful, have the cars, have the house, etc., travel all the time. And that kind of was the stigma of what success looked like back then. When this is back in my 20s, and shifting to, and again, we're California, by the way, and I know California is a big bubble compared to the rest of the country. People kind of depict us as what Hollywood looks like. And in senses, it's true because there's Orange County, which, if you guys seen the Housewives of Orange County, et cetera, it's literally that. I'm not even joking. It's a huge bubble. And then you have LA, which all the movie stars, et cetera, but they don't really see the middle class working people, which is pretty much the same everywhere.
Hmm.
So after shifting from understanding what real values and what success looks in my life, it shifted more to I would prefer peace with my family versus striving and grinding to make $1 million a year. I don't need to have $1 million a year to be happy and fulfilled because I would rather shift it to peace with my family, spending time with my kids. Does that make sense?
Yeah, I love that. I think you might have come to that conclusion even if you hadn't started your own business, just with age and wisdom and priorities shifting. But absolutely. I think when you wake up every day with that being your mission, things are different, right? You treat people different, you attract different people into your world. So that's wonderful. Yeah. All right. Well, Travis, I'd love to shift gears just a little bit and talk about what creative finance in your words are and this idea of building wealth in non-traditional ways. Share a little bit more about what you're all about when it comes to your business.
Yeah, absolutely. So as mentioned, I'm an advocate for financial literacy, and this kind of goes hand in hand with creative finance too, because the way the world works, right? The rules of the money game, we're taught a certain way as we're growing up. And this is where, our school system's a little bit failing when it comes to that. And so we're really learning most of our stuff, through the school of hard knocks. So going through it, failing, not really knowing what to do, and then figuring it out as we go through the hard times. One of the things why I use one is life insurance and kind of these, because that's a method of creative finance as well, because you have ever heard of the infinite banking concept or the be your own bank concept. This is what wealthy people use life insurance for, to kind of go through the money game where you're not having to pay taxes, and you can borrow against your policy, and that's being able to build wealth. So that's part of it. But the second part is you can also do creative finance with many different things. It's not just wealth when it comes to money. It's also assets like real estate. It could be buying a car, or it could also be buying businesses. And right now, with the way our economy is, not a lot of people can qualify with either their credit or the income that they make to be able to be approved for a business loan or a mortgage in order to take over these types of assets. So you step back and like, okay, well, what else can we do? Now let's look into a little bit more of a creative space. Let's look at, okay, well, what's a way I can still make this work where it's still a win-win-win scenario for all the parties involved? And that's why for me, it's switching from just life insurance now to more different things in creative space.
All right,
So,
Travis.
yeah, so one of the strategies that you can build creative wealth with, and I'm going to be merging life insurance with real estate. So first and foremost, is got to understand, how does the infinite banking concept work? And so I'll put this in simple terms. You use life insurance. It's a permanent plan, and we use specifically either a whole life policy or an IUL. I'm not going to get into that debate because there's many different conversations on that topic, but I use specifically IUL. And the way it works is you got to understand that it is life insurance first and foremost. Most people forget that concept. They think, well, it's my investment. It's my investment. Like, no, it's not an investment. It's your life insurance policy. So yes, the money you're putting into it, a portion of that is going towards paying for your policy. And then everything else is building to what's called an accumulation cash value account. And specifically with IULs, you actually have ties to indexes, which if the market is doing well, you can gain very well. And also you have downside protection, because if the indexes are not doing well, you lose nothing. It's not like a 401k investment where it's constantly going up and down with the market. So that's one of the pluses. But the next huge key element of why we would use life insurance is because as you're building the accumulation cash value into your policy, you can actually borrow against it with a loan. So just like how you can pull from, your home equity line of credit on real estate. I mean, yeah, you can pull things from your 401k, but it's not the same, because this one, the reason why it's different is, let's say you put in $100,000 into your IUL and you have $100,000 sitting in your cash value account. If you borrowed, let's say $50,000 to use as a down payment or as a business, investment venture, you take out the 50. Now, in normal cases, your balance would go from 100 to 50.
Mm-hmm.
And so you would only be gaining off the 50. Well, in life insurance, they treat it as a loan, which doesn't take away from your accumulation of value. You have 100,000 there still growing on top of, even though you pulled the 50,000. So you're still compounding off of the 100, not the 50. That's the prime reason why people use this infinite banking structure, because your money's still growing. And again, you look at this down the road and you start looking at bigger cases of people that can put in 10,000, 25,000 a year into these plans where, you're building wealth faster.
Sure.
Yeah, but you gain 10% at, half $500,000. You just made 50 grand in your account, even though you already borrowed 200,000 of it to go buy, purchase a piece of real estate.
Wow. Yeah.
That's the first part. Now that's transition to, okay, now how can I buy the real estate portion of it? Well, let's say let's use a bigger case of $500,000. You're using 200,000 to buy a property. You take a loan that's completely tax-free, by the way. You go in and purchase a property. Now, with certain real estate, again, if you are the specific owner and the home occupier of the home in California, I'm pretty sure it's federal, you have capital gains if your home ever builds equity, correct? And you need to be in the property for at least 2 years. So one of the strategies is, okay, well, let's buy a house. We're going to live in it for 2 years. Let's say we bought it for, in California, you can't buy anything less than 700,000.
Right.
But let's say you use the 200 as a down payment for the mortgage, whatever. And then 2 years goes by, it goes from 500, goes to $1 million. You can now then sell that house. Now, if it's $1 million, you only put in 200,000, you pay down your mortgage, let's say 100,000, whatever. Not, it would be 50,000 actually. Whatever the capital gains is, if you're married, it's actually up to 500,000. You don't have to pay any taxes on the 500,000 of capital gains.
Mm.
If you're single, it's 250. So you can use that 250 and you can sell it and you don't have to pay any taxes on that growth from the house.
Wow.
Now, if you're over that amount, so in this case, if it grew to $1 million, you only put in for 200, it was worth 500 at the time, right? That's going to be more than $500,000 gain. So that's covering more than the 500 I'm married. So what do? Well, the way capital gains works is anything that's over the value, right? How real estate investors can do that without paying taxes is they do what's called a 1031 exchange,
Mm-hmm.
right? Because they take the growth portion, and as long as they move it into another piece of real estate, it's like to like. You're not paying any taxes on that. But the money that you originally put in, all you're doing is you're paying back the loan that you put into your life insurance money. and you keep the ball rolling for your next venture.
Very interesting. I can see it. All
That
right.
and that's just touching the surface because there are much more strategies on
Yeah,
how to acquire properties. Which
sure.
do we have time to go over a second example?
Sure.
Okay. Outside the life insurance side and using or finding funds to purchase real estate, I'm going to use the example of one of the biggest ways that I like to purchase real estate or at least wholesale it is where you can do what's called sub two. You ever heard that before? That
No.
that term. So sub two means subject to existing financing, meaning you have homeowners right now, and they bought a property traditionally. They have a VA loan, an FHA loan, or a conventional loan. But for some reason, they lived in it for 2, 3 years, and they're like, you know what, I don't want to live here anymore. Situation happens, and they want to get rid of their house, so they put their house on the market. In 3 years, how much of your principal on your mortgage are you really paying down?
Not much.
Not much. So let's say it's a $300,000 house. After 3 years, you owe probably maybe close to 275, 280. Okay. And actually, right now, from 3 years ago, the real estate market, hasn't really appreciated that well. So now they're trying to sell their house, but they're literally selling it for what they bought it for. So they're selling it for 300. They owe 280. So after paying the realtor fees, the closing costs, title fees, really they're only going to be making like maybe $1,000, or they may have to come out of pocket if they sell their house the traditional way. So this comes for opportunities like me. Like, okay, well, if you're going to list your house for 300,000, obviously we're not coming in at list price. We're going to be coming underneath because we're buying property. So let's go ahead and get it at 290. Well, again, they don't know what we know. In their heads, they're thinking, well, if you buy my house at 290, I'm going to have to come out of pocket $3,000. So we have tactics and scripts on getting the realtor to admit that. No, we can't accept that offer at 290 because the realtor's going to be pretty much bringing money to the closing table. Okay. Well, what do we do this? What if we go ahead and paid the cash or paid the seller cash, more money than what they would made on the property? We'll take care of your agent commission. We'll take care of closing costs, and we'll just take over the debt on the property. You mean, no, okay. So how's that work? So we're basically taking over the mortgage on the property. So that mortgage is being paid. The realtors get paid. The seller gets paid. And let's say we paid them $5,000 to the seller. That's more money than they would have made on the closing of their house.
Sure.
The realtor gets paid. That's not money coming out of the seller's pocket. And then we take care of closing costs. So what's the win-win? So the seller gets paid more money than they should. The realtor gets paid. And then we're coming in to buy this house for pennies. We don't have to come in with a 10% down payment anymore, 20% down payment. We get to come in at like 5 to 6%.
Okay.
Does that make
Interesting.
sense?
Yeah. So they can just write it over? They're actually selling it to you?
There's still, so this is where the nuances of learning real estate is. So when you transfer title like that, anytime there's a transfer of ownership, typically the mortgage that's already in place needs to be paid, right? There's something called a due on sale clause built into every mortgage across the United States that if there's change in ownership, that mortgage is due in full. So that's actually one of the biggest things they're running into right now is lenders are starting to catch on to this and like, nope, you got to pay it. So how do we combat that? Well, we do what's called a trust acquisition. So just as if, like, say, Krystal, let's say you have kids and you have a home and you wanted to pass that home down to your kids. How would you do that essentially?
Put it in a trust?
That's the most common way to do that because when you put it into a trust, it's out of your name and ownership. So that when you pass, your kids aren't inheriting all the capital gains taxes that they would have to pay from when you purchase the properties.
Yeah.
Imagine this back in California specifically. The homes around here like 30 years ago, 1970s, you can get these for $100,000, $200,000. Right now, today they're worth 1.2, 1.5. So when you transfer an asset like that without a trust, they actually have to pay the capital gains from when they bought it at 150,000 to the difference of what it is today. That's a lot of taxes. So
Yeah.
how would you do that? Is you put it into a trust, just as if you do the same thing passing it to next of kin. So you put it into a land trust. But now here's the trick. Since we're putting it into a trust form, it's very common for people to do that. So it's not going to trigger the lender, right? As long as the lender is being paid and it's not fishy, they're happy. They're not asking questions.
Yeah.
There is an actual law that was enforced. It's called the, my goodness, Guard Saint Germain Act. That's what it's called. Basically states that if there's a change in ownership into a trust, and as long as the seller is maintained as a beneficiary on the trust, they cannot call it due on sale. That is an actual law.
Okay.
That's kind of how we get through the loophole of making sure, okay, well, we have it in trust. It's not uncommon. They're solicited as a 10% beneficiary on the trust. We just have 90% control of the trust, which means we have controllable interest and we can do whatever we want with the property.
Yeah. So many little nuances. That's very interesting. All right. Well, I'm learning a lot. We'll have to be in touch again. This is really great.
Absolutely.
Awesome. Thanks, Travis.
Welcome.
So this is all, I'm fairly new to the insurance world and I'm 47. So, I'm coming late to the game. I know that I've had some conversations with some 20 somethings and I'm like, man, if I, got started back then, right? So, um tell me a little bit about like how do you first of all, how do you find clients? Let's talk about, lead gen if that's the way, or how do you attract people to be open to that conversation and thinking outside of the box because we don't learn this stuff in school. And a lot of times, unless you have a parent like yourself, right? These are all far out concepts, but also they can be really scary concepts if somebody has no idea, that this is an option for them, if that makes sense.
Absolutely. So my lead gen, I've been the same since day one. I'm not knocking other lead gen people or buying leads, click to pay, advertising. How AI is definitely changing how people are marketing today. I know social media is huge, but again, for me, I've always done the things old school. I'm very big on building relationships and warm leads. That's how I do business because my authenticity when I'm talking to people, that's the main thing that people feel, right? I have a saying in my business, right? People want to know how much you care before they care about how much you know. I'm a huge advocate on that. I need to have a conversation with these people, see what they're about, see what's going on in their life. One, for, to show some humility for their situation is one, but two, am I able to offer them a solution for what they're looking for?
Yeah.
So if you can't have those conversations, you can't find that pain point. You can't provide a solution if you don't know the problem is.
Yeah.
And that's what I think right now when it comes to sales tactics, especially there's that missing that key component in there because they already make assumptions or presumptions of what their situation is, and they don't have no idea what they're going through.
Yeah. Well, this type of insurance is very, very different than, auto insurance or home insurance. Like, right. If I need auto insurance, give me the rate, it's black and white. So I appreciate there's such a human element and yes, I personally think there's a big place for AI, but if you take away the human element and just put the AI in, then it's not going to work. You're not going to be successful. So when you're talking to some people, how are you educating them? Obviously, you're sitting down and you're having that conversation, but what does that continued education look like? Because you're not going to fully understand all of your options in an hour, right?
Absolutely. So for me, my sales process is I schedule a consultant call, a consultation, or a discovery call, and really it's the same as this. We're just having a conversation, seeing what's going on in our lives, seeing what some pain points are, what's our main focus is. But it goes based off of the questions that you ask, and there's some key questions that I asked. I asked one, what is your biggest fear when it comes to your future with your finances?
Mm.
Is it your retirement and running out of money? Is it you not being able to afford your bills because of the economy? Is it your child's future when it comes to education? There's certain key topics that obviously when you're looking at families, there's some things that they're going to be hot topics for them. But it doesn't stop there. Then it also starts on to see where is their money IQ is. I asked them, how would you grade yourself on your financial knowledge from A to F? How would you look at your own personal situation right now? What would you grade yourself? And these are kind of indicators to help us that the education part, once I get that understanding, then that's where I can introduce concepts of, okay, well, what do you know about debt? What do you know about retirement? What do you know about the economy and wealth hacks and stuff like that? And that's where the financial literacy piece really comes into play first before I can even implement any other things. Because for me, I truly believe that the rules of the money game is not linear.
Mm.
It's not binary, right? It's not yes or no. It's very three-dimensional when it comes to building wealth. It's not just one cookie cutter way. You got to do this, and that's going to make you this. It doesn't work out for everyone. It's not a blanket coverage for everybody. By being able to do that, offer that financial literacy piece first, again, that's just mainly just data gathering for me. And that's where I'm like, okay, well, obviously this is a solution and something that they need to be educated on, whether it's learning how to manage their debt, build their credit, what type of life insurance or disability insurance do they have in place? Do they not have it, or are they the type of person that just, well, I have it through my job, that's enough, right? Again, just adding more education pieces of letting them know. Again, and I'm not big on fear tactics. I'm not sharing things like, well, you should probably get this because X, Y, Z could happen.
Right.
I know it's a reality, but again, people, I mean, you go back, people either move through fear or pain, right? I never do the fear portion. I have too much humility for people that it's mainly more of a concern of, have you thought about this versus, no, you should get this.
Absolutely. Well, and then it really puts the ball in your client's court. They make the decision. They get to choose, but obviously choosing with more education and understanding is ideal. So the infinite banking piece, and you've mentioned that you sometimes real estate is in there and purchasing other businesses.
Absolutely. My biggest thing when it comes to these types of concepts, honestly, these concepts are foreign to a lot of people. They've heard about it through either social media, TikTok, right? And they may have heard the term or the buzzword, but they truly don't really understand how it works. And I'm gonna digress a little bit, but social media today, I think, has really kind of ruined it for a lot of people. And what do I mean by that? There are a lot of influencers out there that can build a following, and yet they have no financial credentials. There's no, they don't have the licenses in place. They don't have any of the acronyms after their names. Not that those are really important in today's world, but you get my point. It's anyone can really talk about anything, build a following, and then they start believing in a lie. And that's kind of what we're running into. But when I'm introducing these new concepts, it's really, like I said, foreign to them, but it does perk up their ears. Or like, I didn't know that was possible. It is, and it's completely legal because again, it's about the education and learning about the rules of the money game.
Absolutely. Very good. So, all right, I've got two last questions. I think that there's probably a lot of parents or soon to be parents. So, I would just love your opinion if somebody was to do something for their children, whether their children are infants or, maybe in their teens. Are there any, as an educated person in this field who have children, what would you recommend if people had the money to spend, or even if they don't, what kinds of things would you recommend to set your children up for success?
Absolutely. So looking at the three-dimensional piece of finance when I sit down with my family is obviously we got to make sure that their foundation is built. Yes, they have the money, but is their emergency fund properly built? Is their debt in check? Once those our foundations are in place, the next thing is protection. Do you have your life insurance in place? Because if you go down as the breadwinner or the income earner, how is your family going to be supported? And it's not just passing away, it's also what happens if you get disabled and you are no longer able to create income. And that's the conversation that a lot of people don't have. So I started there, but then when it comes to building um, future for kids, right? I know we had the 529 plan that the Trump administration just changed, where they're actually matching dollar for dollar, and the rules and stipulations are not so strict as they once were. So that's a great tool. But for me personally, I like to using the infinite banking strategy with fully funded IUL for my kids. Because by the time, if you start it when they're 2, 3 years old, it's a college savings fund, but they don't have to use it for college. And by the time they get to 18, and let's say it's fully funded, and what I mean by fully funded is you're putting in the max amount you can based off of what the death benefit is. So it's not just I put away $50 a month. It's like, no, I'm designing this policy because I want to be able to put in 6,000, 10,000 a year for my kids. So that way, by the time it grows with the compound interest, by the time they're 18, they're going to have $50 to $100,000 that they can now use and be responsible for. And at that time, once they understand and have the responsibility of money, because we're able to teach that to them, and we can now transfer ownership to that policy where now they can now put in their money into it, etc. So I use that as a huge, huge future tool when it comes to our.
Awesome. Thank you for that. Educating our children is so important. I feel like we can always do better, but that's really helpful. Now, how about speaking to the entrepreneur, maybe the person who wants to go out on their own, or maybe like me is, a year and a half in. Do you have any words of wisdom for that entrepreneur?
Yes. So I'm going back to my journey because I know we're speaking today, and I'm 39 today, and I've been, I started this when I was 26, 27. You're walking into my chapter like 31 today. You did not see me at my chapter 2. So for my newer people that are on their chapter 1, 2, and 3, my biggest advice is you constantly have to keep learning. Have to keep learning. New skills is very important. The things that are uncomfortable for you, they need to become comfortable. That's first and foremost. Secondly, as we already talked about it, is you have to find a way to push through, because there are many days where you're going to want to quit. You're gonna think to yourself that, is this for me? I don't know if I can do this anymore. I would rather focus on my comfortable paycheck of a job because I know I'm good at that. And I know it's guaranteed and for sure. I encourage everyone, you have to learn how to persevere through that, because what's the saying? Worst day at your job is still better than your best day here. If I said that right, I don't think I did, but you get my point. You're just around the corner for an entrepreneur. Just your worst day as an entrepreneur is still way better than your best day at your job.
Mm.
Once you start getting it, you start seeing the momentum, you start seeing the income come in, and then once you get that small win, bring on that momentum and keep pushing.
Yeah.
That's one thing that I've seen with entrepreneurs too, and I use myself as a testament on this, is that I get a win, a huge case, a big check. We're talking $10,000, $15,000, cycle, and I start to slow down and chill for a minute because that's the most money I ever made, at the time. That's my job paycheck. That takes me 4 months to make.
Yeah.
So keep pushing through, find a way to carry that momentum and keep going, because once you get that snowball rolling down the hill, it's a lot easier down the road.
Awesome. Well, thank you so much for your time. This has been great. Lots of little nuggets. I really appreciate you. And I'd love, how can people get a hold of you if they wanted to look you up on LinkedIn or your website? How can they find you?
Yeah, absolutely. You can go to www.ftgfin.com. That's my financial website. Or you can find me on my socials. I am Travis Yoh CEO is my personal, and I also have FTG Financial on social. And then if you want to start looking into the creative side of things, I just created Creative Lab Inc. That's the new one right there for socials.
Okay, and that has some education around our non-traditional options. Is that right? Fantastic. All right. Well, thanks again for your time. I really appreciate it.
Absolutely.
Thank you for spending time with me today on Small Strides, Big Business. I hope this conversation gave you some clarity, confidence, or one new idea to move your agency forward. If you enjoyed today's episode, make sure to follow or subscribe and share it with another agent who could benefit. I'm Krystal Small, and remember, every small stride you take today builds the foundation for long-term confidence, stability, and growth in your business.